Thank you guys for being here. It's a panel with a lot of friends, old and new. Some of them I actually never met in person, but had heard a lot of good things. So today we are having this panel, Evolving Asian Crypto Landscape, Regional Overview and Outlook. And next to me is Kelvin Ko, the co-founder and CIO of Spartan Capital, and Jason Kam, founder of Folius Ventures, and Ciara Sun, founder and managing partner of C-Squared Ventures. How about start with a round of intro of yourself?
Sure. Hi, everyone. My name is Kelvin Ko. I am the co-founder of Spartan Group. And at Spartan, we have been in the crypto space investing for the last 6 years. And we have several lines of business. We have our investment management business, which consists of 3 funds. We have a long-short fundamental crypto hedge fund. We also have 2 venture funds, including a fund that's focused on decentralized finance, as well as a fund that's focused on gaming and the metaverse. And we're still actively investing out of these funds, despite the market environment that we are in, because we're in this for the long haul, and we're here building with everybody in the ecosystem. The other piece of Spartan Group, which is also very important, is our advisory business, where we are the top 3 advisor globally. We work with many of the top founders in crypto to help them raise capital, do M&A, as well as do restructuring. So think of us as an investment bank, but serving predominantly crypto companies, right? And in the past, we have worked with some illustrious projects, such as Blockstack, where we helped them raise capital back in 2019. We also helped the team at Solana to raise one of the earlier rounds during the last bear market, which then allowed them to continue building. Also helped the guys from Dapper Labs raise capital when they were launching the Flow blockchain, but they had very few believers at that point. And there are many other deals that we've been involved with over the past few years. And then the last piece of Spartan is Spartan Labs, which is our very own venture studio, as well as incubator, where we work with many of these startups that are still ideating to co-build with them. And Spartan Labs will be launching some of their products in the coming months, and will help hopefully advance the industry going forward. Thank you.
Jason, please.
Yes. Hi, I'm Jason. I'm the founder of Folius Ventures. We started off 2 years ago, and actually, before we started the firm, we asked Kelvin for his advice on setup and many other things. I think we are slightly different in 3 ways. You know, we tend to focus around APAC founders and APAC projects. We spend a lot of time looking for folks who are coming out from Shanghai, from Shenzhen, and sort of building businesses within Web3. I think most of our backed startups came from this region. That's part 1. Part 2 is that we're a hybrid structure. You know, we invest in public and private investments. And on the private side, typically we cut $500,000 to $4 million checks, predominantly in seed and pre-seed startups, so very early stage. And then lastly, I would say we are a bit more business model oriented versus tech oriented. And that has led us, well, first of all, a good place to be in Asia. And secondly, to a lot of centralized exchanges, applications, SaaS businesses, gaming products, and so on and so forth. Many know us as the lead investor in Steppen, but we have also done other projects such as Scroll, such as DBank, and many games that you'll probably see coming up in the next 6 months.
And Ciara.
Hi, everyone. I'm Ciara Sun, founder and managing partner of C-Squared Ventures. We are a early-stage Web3 investment firm. We just actually started last year. We officially launched in Singapore during TOKEN2049 last year, and it's our 1st-year anniversary here. Very happy to celebrate with lining up with my really good friends here. And we aim to provide not just capital, but also operational expertise to the founders that we like, and we help them shape their DNA and help them with the crypto side of the things. And prior to found C-Squared Ventures, I was the VP of Huobi Group, so I had sub-listing, investment, global markets, retail growth, and institutional business for Huobi for a few years and joined crypto in 2017 full-time. Prior to that, I was doing traditional finance, management consulting at BCG in New York. And I actually got into crypto because I was still doing liquidation for Lehman Brothers in 2013 and found out about the BTC white paper. So very glad to be here and talk about my favorite topic, Asian crypto landscape.
Thank you all. And my name is Mabel Jang. I'm the Chief Revenue Officer at Find Satoshi Lab, which is the mother company of StepIn, the Web3 fitness app that many of you may have known, and more, the non-custodial multi-chain NFT marketplace, as well as the upcoming strategy game called Gas Hero. So I'm very excited to have this conversation. The first question I would like to ask all of you, obviously I think crypto is all global. You invest in global primary market, but a lot of the focus, since like you guys are all based in Asia, has been the Asian primary market. What has been the trends and the observation that you had with the regional, with the founder that's based here, and also how is your fund adapting to these observations and trends? Maybe let's start with Kelvin.
Sure. So Spartan Group primarily has its base here in Asia. So we have a big team here in Singapore itself. But personally, myself and many of the members of the investment team are in Hong Kong. And we also have other members scattered around the region. But as an organization, we invest globally. And we also work with founders on a global basis on the capital market side. So our focus is global. But obviously, being in this part of the world, we try to also be active in terms of supporting the founders that are here. And one of the things that I think a lot of Asian founders struggle with is, number one, language. Number two, understanding the Western culture and how to approach VCs, for instance. And thirdly, they generally don't get enough visibility compared to some of the other projects in the US. So oftentimes, we work with a wide network of partners around the world, other VCs, for instance, where we introduce the portfolio companies we invest in this part of the world to them, right? And we help the founders craft a message so that they can better connect with the other investors, which then helps them to fundraise. Similarly, because of this reciprocal approach, our partners in the US and Europe will also then direct deal flow to us. So that's one observation. The second observation I would say is, I think having invested in the space over the last 6 years, we've seen a lot of strong infrastructure projects, but predominantly those have originated from Europe or the US. In Asia, we tend to see less infrastructure or successful infrastructure projects. But at the application layer, I think that is quite different, right? We've seen some strong DeFi projects being launched out of Asia. And in the gaming space particularly, I think there will be a lot of strong projects coming out of places like China, Japan, as well as Korea, because those places already have an existing ecosystem. They have very strong IP and content. And we're spending more time looking at those projects in Asia.
Yeah, I want to echo Kelvin's point, which is English. I think a lot of the founders we talk to, the joke I give is that of the deals we've done, like the 3 we've done recently, 2 of the founders were divorced like recently, and they are now a free man to like explore crazy stuff. English is a problem for a lot of them, not only because most of them have a background of mostly kind of building within Chinese Web2 businesses, but also they sort of their products never delved out of China. They were always competing against each other in China. So I think a lot of times we look for founders that have an international background. Maybe they study in the States or they worked in Uber or something. So to know how things should look outside of the States, but also have international growth experience. And once they have that experience, I think it's much easier to build their product for, let's say, Southeast Asia or for the rest of the world. And we want to make sure they have that before we even back them. And when they do, you oftentimes see them having almost ruthless pragmatism when it comes to picking solutions. Not very decentralized, oftentimes don't really care about optics. So, and sort of where we come in is like, well, actually, yes, you are building a consumer product. You probably should be aware that within Web3, a lot of things are financialized. And for things to be financialized, there's expectations on a lot of things. So there's a bit of legitimacy issue that you have to really think about when communicating with the community, or even kind of when you think about building a product. So I think where we come in is sort of really giving them the bridge of how do you sort of do this properly, almost a bit of investment relations guidance, and sort of helping them avoiding the pitfalls in going through this journey of leaving Shanghai and Shenzhen and moving to Singapore, Hong Kong, and expanding in the region. I think that would probably be the biggest value add.
So I do agree for a lot of the Asia founders, going global is one of the biggest challenge, right? So back at Exchange, it was really hard for us to onboard, especially Western customers, because we lack of the knowledge of understanding their trading behavior, tailor the product for them, UI, UX. But I think it's reversely speaking, it's the same thing, right? For Western customers to really get mass adoption of Asia users, it's really hard for them too. So it actually worked quite well in the last bull market for the exchanges, and then a lot of the applications, for example, the users are more Asia-focused anyways, and then they're more, adapted to technology itself, such as, China. They're like so used to Web2 applications already, and they trade by themselves. It's not like compared to more established economies like the States or Europe. They hire a financial advisor to help them with manage their assets. So we see a lot of buying power from both China and Chinese-speaking countries overall, and also Korea. And I think on the other side, for Chinese founders, one advantage we see is that they really understand how to operate users in detail. And we see successful mass adoption of applications happen in Asia that led the way in Web2, such as Tencent, WeChat, TikTok. It was all just Asia founders. And we see that happen too in Web3. That's why a lot of the exchange founders are all Asians, right? Like Asia backgrounds, and very successful applications like Stefan, like Axie. They're all Asia founders as well. So that's why we very long Asia in terms of investment in this cycle, especially because I think the next bull market is going to come when max adoption actually happens. And then I think in terms of talent acquisition, Asia is also happening very fast as well, given the regulatory landscape has been booming very, very fast for Asia. Now Hong Kong is giving out retail exchange license, classify NFT as a commodity, they're approving ETF. And then Japan and Korea, as one of the leading markets, they also approved exchange license years ago. So they're one of the most active markets in the space. So that's actually as a fundamental and foundation to actually acquire very good talents from traditional markets. I think Asia also has the edge.
Thank you all. I wanted to follow up on what Ciara mentioned about, a lot of the exchange founders were Asian, obviously. And then we also know there's like a huge dynamic change in terms of I think back in 2017 or even earlier, we can kind of say like China or generally Asia has been dominant in mining industry, right? And also like we've seen a lot of the exchanges coming out from China. So how are you, given your past experience, I'm sure you're very familiar with this history, can you maybe share with our audience about the change of this history and how you're seeing the power dynamic changing now towards?
For mining?
For mining, for exchanges, and all of these things that previously Asian has been dominant about.
Yeah, so two separate questions. Let me talk about exchange first. So my view on the exchange landscape right now is that centralized exchange, non-regulated ones, market share for them is at peak. Their market share will just be decreasing since today. And I said it last year, actually, after FTX happened. I think it's absolutely peak for the market share of central exchanges that's not regulated. And whoever's going to take their market share is going to be regulated ones. And then decentralized exchanges that have a very good order book experiences and UI UX that can onboard and facilitate institutions to trade with good liquidity. So that's why we backed Orderly. That's order book infrastructure cross-chain. And I think that's going to be the future for exchange landscape. And hopefully that application will come fast and can onboard really good users, not just institutions, but also retail. Get them to onboard into Web3. That's a gateway exchange. Trading is the most used applications anyways in crypto. And given that, I think Chinese founders or Asia founders overall still have the edge because that's still a very in-detailed exchange businesses like in detailed operational skill sets. They understand the user's behavior, they understand how to run all of the campaigns, and then also serve them with 24-hour API support customer service. And I think that's the key there. And then for mining, we know in 2021 May, China shut down mining business. So all of a sudden, 51% of mining power in China it's gone. And then slowly, it's very painful for all of the mining founders. They have to migrate all of their business to outside of China to different countries around the world, and that's been a huge challenge. And I think that's also why Asia has been losing a lot of power for actually setting the price for Bitcoin. It's not just because of exchange, but also because all of the virgin coin mined, are now moved away. I think one of the other challenge for mining right now is how to be friendly to the environment, green to the environment overall. But still, mining is a key and is a very important aspect in our business. And I'm very curious to see how that landscape is going to change in the next few years.
Thank you. And I want to follow up with Jason on something separate, not on the previous topic. So you guys invested quite a bit in application layer, and you've thought a lot about user onboarding in terms of like the game design as well as like maybe fiat and also stable coins and a lot of other things. Can you maybe share some of the insights that you've been studying through all of these portfolio that you invested in about like how we can really ignite or get the next generation or next wave of mass adoption into the industry?
Okay, that's a very loaded question, right? Because there are two parts. Is that what are the pain points and what would a good high DAU product look like when it has Web3 features enabled? I might answer the second question first, which is what would the Web3 features kind of look like? And my view had been that there needs to be sort of three things in there. One is that, well, it probably needs to have really strong usage of stablecoins in one way or another. There are certain grayer use cases that you can't use a fiat US dollar rail. So USDC, USDT, probably necessary. I think for a lot of entertainment applications, the cost to get to critical scale and network effect has been just astronomical when it comes to cash cost. So as much as people throw shade at the recursive way of growing through Web3, as experienced by Axie and Steppen, I thought giving away sort of network economies to the folks that make the network successful is a pretty good way of not spending any cash while getting to certain sizable DAU count. The second part. And the third piece is it probably wants to have a deep enough economy that the tick rate on it is sustainable for supporting the recursive way of growth. So I think that's what it looked like, and it's sort of, when you put that into an application, there are only certain types of applications that could be viable, whether it's extremely high ARPU extremely high ARPU SLG game like Gas Hero. It could be a game that everybody likes, like shooters or MOBA. It could be a fitness app, or it could be something like a browser. But I think the barrier to that point, it's just really painful to play with the account. It's really hard to get dollars in and dollars out because Apple is not really that supportive. And nobody wants to pay a gas fee every time there's a transaction. So to the extent that we can have vendors that seamlessly aggregate fiat on off-ramp channels, to the extent that we can have a layer 1, layer 2, or any solution that completely abstracts away the gas fee, or if we can have a service provider that just makes the account more like a Web 2 wallet, I think these pain points would just go away. And I think the conversion from onboarding could drop from 0.1% today for most Web 3 games to maybe 10%. And all of a sudden, the cash cost starts making sense. We probably see that in the next 24 months, hopefully.
Can I also add a few points there? Yeah, so I think it's still difficult in general, right? As Jason mentioned, to onboard users into crypto or crypto games applications. And part of that is the on-ramp issue that Jason talked about. I'm hopeful that that's going to start changing because USDC is obviously regulated, right? And increasingly starting to permeate across more different channels. Recently, they announced a big expansion into South America. We're starting to see Visa, for instance, also announce settlement in USDC on the Ethereum blockchain and the Solana blockchain. So over time, more people should have USDC in their wallet, right? It doesn't matter what wallet they have. It could be a MetaMask wallet. It could be an in-app wallet. It could be on a Telegram wallet. But most people should have USDC in their wallet at some point. And then once you have the USDC and you can easily move that USDC into a new application, then that sort of speeds up the onboarding process. The second point I want to make is, notwithstanding the still somewhat cumbersome onboarding experience, if you look at the applications that we have today and compare with what we had, say, 4 years ago, I think some of you who have been in the space for a few years would remember some of the early applications like Ether Delta, for instance, where it was, even if you're the most ardent DeFi fanatic, you wouldn't trade on it, right? Because there was no liquidity, the transactions took forever, and the user interface was just terrible, right? But today you have things like Uniswap, and you have DYDX and other applications that, frankly, from a UI UX perspective, is much, much better. Gas fees are lower, and moving money around is a lot faster, right? So the experience over a 4-year time frame is really leaps and bounds, over what it was just a few years ago. And obviously, that will continue to improve. And then the last point I should also mention is, this point about sort of incentivizing the early users of the application. I think that's not necessarily a bad thing, right? Because if you think about, and it's not a new concept either, right? If you think about Uber, right, which we all use today, when Uber first started, they were aggressively giving out rebates to onboard drivers and to onboard users, right? But they make it a no-brainer for anybody to actually use the app. And even if you are not an existing customer, the fact that you're paying only half the price you would pay on a taxi just made it more compelling for people to test it out, right? And they kept giving these subsidies for a long, long time, and all of that funded by their VC backers, right? But what it meant was that they were able to achieve this hockey stick growth and to be able to onboard billions of users over time, right? And then over time, they sort of took away those subsidies, but it's sort of become second nature to using Uber, also because it's a better product, that they were able to retain those customers, right? So think of these airdrops that these projects are giving out, these Web3 projects, as a way to entice users to experiment with this app, right? And over time, sort of achieve the same sort of growth hockey stick that Uber achieved in its earliest days.
Thank you. I want to pivot a little bit, talk about regulatory environment, because I think back in the day when I was an investor, and even like up till today, I got one of the most asked questions to me was, oh, I heard Hong Kong become very friendly to crypto. I mean, like a few of you are actually resident in Hong Kong. So how is actually that? So I'm curious, what's your take right now in terms of the general regulatory environment in Asia? Maybe we can start with Kelvin.
Yeah, sure. So the last 6 months since Hong Kong announced its opening and sort of rolled out red carpet towards the crypto industry, I've had multiple requests from friends and funds and project founders all across the world, wanting to basically get up to speed with what's going on in Hong Kong. I think Hong Kong really is opening up to crypto, and I am personally connected with the people that are making these rules and regulations, and they really want to turn Hong Kong into the fintech and crypto hub of Asia, right? So that ambition is very clear, and they are providing, or they're committed to providing a very clear regulatory framework for exchanges to be able to offer products to users, and for liquidity providers, market makers, funds to be able to operate in a legal, legal way. And I think that's a good thing. Obviously, it takes time for these regulations to come, but I think it opens the door to institutional participation in a way that hasn't happened before in the crypto industry, right? I think Singapore is also quite similar in terms of its approach, and we're starting to see places like Korea as well as Japan, starting to push the envelope that way as well. And Europe is also largely heading in the same direction, right? The only place where it is still very hostile to crypto founders and investors in general is the US, right? But obviously, being investors in this part of the world, it's a great thing for us, right? And it just makes our lives easier as investors, and it also makes the life of founders a lot easier when it comes to things like raising capital. Now, I have a background in finance. I spent 20 years in traditional finance before I came into the crypto space. And so that regulatory clarity is very good for the future of the industry, right? Because it allows the industry to be able to continue to develop and grow. And frankly, the industry standards are high, but once people are aware of what these industry standards are, it really isn't that difficult to comply. So what I tell a lot of people that are coming into the space is that don't be afraid of regulations, right? And embrace regulations, because that's the only way that the industry is going to grow over time.
I thought it was pretty comprehensive, but anything you guys wanted to add, feel free to.
I already gave kind of a summary of what's happening in Hong Kong, right? So the retail exchange license, where Hashkey already got it, and then NFT is classified as a commodity, so you don't technically need a license. It's like selling a book, selling flowers, right? And then they're approving ETF and ETP. Hong Kong has its edge because it's connected to Shenzhen. That's, to Jason's point, the best developers are there. There are the Tencent developers, Huawei developers. There is a kind of 007 working Mainstage in Shenzhen, right? People are very, very talented and hardworking. And capital-wise, I think it's the foundation that can actually onboard institutions. And I think the last bull run was because institutions actually got on board. At Huobi, we saw the institutional trading volume percentage grow very fastly from only about 17% to 75% in 18 months. And that's how much the customer structure has changed. And that strong of buying power and TVL in the industry can actually push for a bull market to happen. And one more country I want to mention is Vietnam. It's also a very, very interesting market. It has been, across all big exchanges, top 5 market in terms of users, FTTS and DAU for all of the big exchanges, and it is a top 3 market for MetaMask for DeFi users as well. So Vietnam is very interesting. They have one of the biggest wallets, Coin98, and they're now working very closely with Tomo Chen. They have really good builders, and I think that's a very interesting market as well. I think Vietnam is also working on the regulatory framework for crypto. I think once that happens, it's going to be another very strong rising star for Asia in crypto.
Ciara is doing a very good job. Even on the stage, she's shilling for her portfolio.
As portfolio, not for this one, but not for C-Square. But
so one other point to add also is, I think the other thing about regulation is that it holds founders accountable, right? Because in today's environment where, frankly, it's a wild west, right? People can sort of build an application, and if they raise a lot of money, and if the founders are dishonest, they can sort of rug pull their users, right? And we have seen a lot of these things, happen in crypto. And that sort of makes crypto a bad experience for users that, put their money into these applications, and they're hoping to try it out, and then they lose, tens, hundreds, thousands of dollars, right? So once you have regulations, then these founders, it's harder for them to pull off scams like that. Regulations will also mean that it will be harder for these hackers also to constantly attack these applications and protocols, or at least the law enforcement will go after them, and as we have seen recently. So it gives end users the confidence to actually interact with these apps, right? Because in the world of Web 2, when you download an app from Apple or Google Play Store, you don't expect that you will experience something like that, right? And so that hopefully over time will also bring new users into the ecosystem. Cool.
Another hotly discussed topic was about, I think a lot of you probably observed the L1s, especially the ones from Western market, come to Asia to look for applications, right? They go to Japan, they go to Korea, they go to Shanghai, like back in 2017 or whatever. Like it's kind of been like a one set. You have to go through the whole thing. Obviously, we also have a lot of DeFi protocols, not just the social entertainment applications that are being developed in Asia. So what has been your observation in terms of the kind of L1 blockchain, or maybe some roll-ups, right, like the L2, that the application layers has been looking for in terms of like what they want to optimize for? Maybe start with Ciara.
Start with Jason.
Oh, okay, let's start with Jason.
You're looking at me, but you pointed at her.
I was looking at him and then.
Well, fair disclosure, we invested in Scroll, so like I was going to shill it as a ideal CKE.
No shilling, please.
No, sorry.
Kidding.
It's okay. Go ahead.
I think one of the biggest challenges for when I think about the apps with real production value, like they've sunk $5 million already into the product, they're going to sink $15 million more, and they are now trying to put actual assets from the product onto a chain. And I think the reluctance we hear is we're not going to put it on something that's only been live for a month. Like, for example, like Polygon has been live for however many years. We know it's sometimes problematic at places, but we know kind of where the potholes are, so we're still going to do it. Versus, yeah, like this is a shinier, optimistic roll-up by Caldera, great, but I just don't know how it's going to break. And what about all the infrastructure of fiat on-off ramp and so on and so forth. So I think the ruthless pragmatism for the Asian devs with production value actually really show through here, which is kind of like, well, let's just pick one that works. We're going to kind of work with them, really good customer support. And if it's less decentralized, so be it, because we can migrate it to somewhere else that's more stable and decentralized later on. That's kind of the observation. You're laughing. I guess it's...
Because like you're speaking my mind.
Yeah, I guess. Yeah.
And we also think about where are the USCC and USCT, obviously.
Yeah.
Are you done?
I'm done.
Oh, okay.
Let me
How
stop there.
about Ciara?
Yeah, so we are chain agnostic fund. A lot of the layer ones, almost all of them were my past portfolio, and we listed them. And there are some of them are my LPs, and we don't like favor one or the other. But I can, more generally speaking, I think when teams looking for a chain to deploy on build with, first of all, you think about a technology, implementation power, and the ability to actually implement and make things happen, right? And to work smoothly with the engineering team. And I think secondly, more importantly sometimes, is to be able to build a very healthy and stable ecosystem. So it's about uniting the community power and really provide hands-on help. Just like us VCs, right? We also provide all the help that we can, including shielding our projects on stage. If ecosystem and a chain can do that, really hands-on support for the developers, and I think that's the key for them to choose who to work with. And I also talk about one thing that we were talking about off stage is about DA, right? I think there are still fundamental problems with the current DA solutions right now, that the data integrity cannot really be verified or backed by the current storage solution, right? So the ability to do instant audit on the data and to improve on the storage layer for all of the different layer 1 and layer 2, I think is the key for the industry to work on for the future problem. And Squirrel is working on that, so it's good.
Thanks.
Yeah, rising star from Asia.
Showing someone else's portfolio. Nice job again. Please go ahead.
Yeah, so I have a few perspectives. The first is that obviously we saw a big sort of wave of investment in these layer ones, right, back in 2016, 17, 18. And then that investment shifted to the application layer, right, where we saw in 2020, after DeFi summer happened, a lot of capital came in to build these DeFi protocols, right? And in 2021, when Axie Infinity happened, play to earn sort of became a big thing, we saw a lot of capital start to fund these gaming applications, right? And now we're sort of back to building the infrastructure again. I think inherent in all of this, and why we're seeing this trend, is the fact that, number one, even with all of the new layer one chains that launched back in 2020, 2021, when we had all of these applications start launching, all of these new layer ones themselves also experience an increase in gas price, right? And we start to experience some infrastructure constraints. And we have only barely scratched the surface in terms of what kind of applications can be built on the blockchain, right? So we have DeFi now, we have gaming, we're starting to see social and identity, but there's going to be many, many other different types of applications that will come, in the years ahead. So this infrastructure bill ultimately is going to be needed if we're going to onboard all of these applications, and we're going to onboard hundreds of millions of users onto the blockchain. So that's point number one. Point number two is that we have had, as I mentioned, the last 2 years, a lot of money going into infrastructure, and frankly, I think there's a bit of froth in that segment of the market. On the other hand, at the application layer, companies and startups are having trouble raising capital. And many of them are running on a runway if they had raised capital 2 to 3 years ago. Right? So at some point, I expect that somebody will have a breakthrough application that will then excite the industry, just like what happened with DeFi Summer and what happened with Axie Infinity. And then the capital will rotate back to the application layer to fund the growth that is to come. Right? And not to mention some of the other new verticals that will also emerge. And then the third observation I would say is that for the first time, for applications that are actually getting user traction, they now have a choice in terms of which networks they want to deploy on, right? And so the bargaining power at some point will swing to the application layer as well. And with all of that network, being interconnected with different messaging protocols that allows assets to be moved between one blockchain to another, I think we will have really a more robust and more interconnected web, which eventually then become obfuscated, right? Where the end users will come in and they will not have to be worried they will not have to worry about what chain the application is built on, right? And hopefully, 4 years from now or 3 years from now, when we are having a conference, people will not be talking about layer one chains anymore. We will be talking about applications and users and growth and so on and so forth.
Absolutely. I would like to maybe wrap up this panel by asking the one last question. I would just like you guys to have a brief, short answer, given the time limit. What has been one or a few the most underrated Asia-based thesis that you've been having? Let's start with Ciara.
NFT marketplace. Yeah.
Mining business? What did you say?
NFT marketplace. Yep.
Oh, she said what I want to say, but NFT market.
Oh, really?
Yeah.
Yeah.
Can you elaborate a little bit? Like maybe with 1 or 2 sentences.
Yeah, so back to my point about running exchanges. NFT marketplace is also about in-detail user operations and also selecting the best assets for your users to trade and protect them. And also have the most stabilized system and security level. And that's all the things that Asia already had in the past few years, 10 years in crypto. And I'm just very, very surprised to see there isn't one killing and leading NFT marketplace from Asia yet. So I think that's definitely going to happen.
Yeah, it's going to happen.
Do you want to?
I agree with Ciara.
Exactly the same.
And I think the NFTs will look differently than PFPs. I think game assets, different type of CSGO skin things, it'll look different. But I think an Asian is going to, when that wave happens, some Asian is going to probably figure it out.
How about you, Kevin?
Yeah, underrated? Yeah, I would agree, largely. I'm a big NFT collector and very bullish about the long-term applications of NFTs and how big that, the collector base eventually will be and the different types of applications that it will be used in.
Thank you all very much, and thank you all for listening.